it's a delusion. The asset itself is creating nothing.
I think it's a scumball activity.
I would short it if there was an easy way to do it.
One of them was calling it a scumball activity. The other saying, Bill Gates saying he would short this thing if he could. And you're saying they're all wrong.
Yeah.
Explain.
Well, look, not everybody is right all the time. And I think we have to acknowledge that we all have biases. And look, I'm a disciple of Buffett and Munger. And one of the things that they have said for years, which I believe, is you define a circle of competence and you stay within it. And I think it's been clear in his entire investing career that technology is not in his circle of competence. And so the only technology name that he's owned is Apple. I mean, you could claim that IBM was a technology company. That's borderline.
But as an investment, okay, you're right. Hate is not strong enough. Hate with extreme prejudice as an investment.
Oh, gosh. Okay, so Bitcoin and gold on the same level for you.
They're both collectibles.
Okay.
The value is based off of supply and demand. And the good news about Bitcoin is there's a finite supply that will ever be created. And the bad news about gold is they'll keep on mining more.
Well, Goldman Sachs says that we only have 20 years left of mineable gold.
Well, then in 20 years, we could have another conversation.
That its volatility based on speculation is so much greater that it's not an effective storehold of wealth, and which is also one of the reasons it's a problem to be a transaction vehicle, because if a vendor says, I'm going to get paid in Bitcoin, and they don't know what that means in terms of their other liabilities, that's a problem.
And what changed my mind, and I was very specific on it, was I'm in the ETF business. And when I saw that the Canadian regulator and the Swiss regulator and many other regulators, that this has happened just in the last 60 days, have opened up to allow a ETF that holds one asset, Bitcoin. Now that's a game changer. There's no question about it. That allows institutions and individuals alike to allocate. And that's number one on the hit parade that really moved me, because I have actually owned crypto since 2017. Ethereum and Bitcoin, but not really been able to speak about it because regulators really frowned on it. And as you're well aware, this is a very controversial issue.
And so we do believe that Bitcoin is getting ready for institutional. But when we actually think about this, is Bitcoin ready for institutions? Bitcoin is it's roughly a $600 billion market cap. So not even half the size of Apple or Amazon, right? Yep. Doesn't put it into perspective. And yet it is a very big idea. I think a much bigger idea than Apple or Amazon. It's the first truly global digital currency out there. And it is completely decentralized. There's no throat to choke. So unlike with Libra, you had Europe and the US and many countries saying, we'll never allow this. That's because there was one throat to choke. With Bitcoin, there's no throat to choke. And in fact, when China basically shut down the exchanges in China that dealt in crypto, especially Bitcoin, that activity just moved over to Japan, Thailand, and Korea, other countries that wanted to move ahead in this innovation space. They did not want to miss this next big thing.
Experts are now saying that Bitcoin could soon replace bonds in your retirement portfolio. Like just recently, ARK Invest Cathie Wood said that people should begin treating Bitcoin like a new asset class because it is. Large corporate and institutional investors are beginning to use Bitcoin as a hedge against the US dollar by buying up a lot of it. Like we just had Tesla announce their $1.5 billion Bitcoin investment earlier this year. PayPal announced that they would enable cryptocurrency as a funding source for 26 million of its merchants. They also just bought the crypto security company Curve for $200 million. The payment processing company Square also invested $170 million into Bitcoin, and the analytics company MicroStrategy has been keeping a significant amount of their cash reserves in Bitcoin. Plus, they've continued to buy in, even at all-time highs. Like JP Morgan, who not so long ago called Bitcoin a fraud that will eventually blow up, and who also said that they would fire any trader who bought Bitcoin because it's against our rules and they are stupid and both are dangerous, is now now advocating 3 years later that investors place 1% of their portfolio in the cryptocurrency, and they're even launching their own Bitcoin exposure basket that gives access to 11 companies that hold Bitcoin.
And I mean, first of all, I think people should not invest their life savings in cryptocurrency, to be clear. I think that's unwise. But I mean, if you want to sort of, speculate and kind of like, I don't know, maybe have some fun. I mean, it's like there's a good chance that crypto is the future currency of Earth.
Right.
And then it's like, well, which one is it going to be? And maybe it'll be multiple. But it should be considered speculation at this point.
Tesla could potentially make more money from its Bitcoin investment this year than profits from electric cars in all of 2020. What's your take on that?
Well, look, Elon has tons of money and he's very sophisticated. So, I don't worry that, his Bitcoin will sort of randomly go up or down. I do think people get bought into these manias who may not have as much money to spare. So I'm not bullish on Bitcoin. And, my general thought would be that, if you have less money than Elon, you should probably watch out. Bitcoin happens to use a lot of energy. It happens to promote anonymous transactions. They're not reversible transactions. The Gates Foundation does a lot in terms of digital currency, but those are things where you can see who's making the transaction. So digital money is a good thing.
Crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
Brian Kelly, what do you think?
Yeah, I think 2017 called and wants its criticism back. That's what I think. I mean, these are old criticisms of Bitcoin that have been proven. It's just, it's ridiculous. But here's the good thing is the Fed does not see Bitcoin as a threat to the dollar. If you were worried that the Fed might see that and might do something, that's all you need to hear. It's all systems go for the Bitcoin.
And so the pernicious issue is that the inflation rate of assets it was 8% a year from 2010 to 2020. It was 35% from March of 2020 to March of 2021. And if you're 21 years old and you've got a job earning cash, you just saw your assets inflate by 25 or 30%. That's the risk of inflation. So once you understand that, then you realize if you wish to preserve your wealth or to create wealth, the number that matters is the cost of capital, i.e. the asset inflation rate, which is equal to the S&P 500 index return or the M2 money supply, roughly speaking. And if you're not actually able to keep up, stay ahead of that, you're getting poorer. So if you're a laborer, if you have a job and your salary didn't go up by 25% in the last 12 months, you got weaker, you got poorer, right? The government doesn't want to use 25% as the inflation rate because they don't want to give every federal employee a 25% raise. And so they'll say, well, it's only 1%, there's no inflation yet. But then again, if every house in America on average, according to Case-Shiller index, went up by 11% this year, how is that 1%? Well, you just don't want to buy a house. That's not for you, right? These are not the droids you're looking for. It's patronizing, and it just reminds me of this one famous phrase. All of our research shows us we can't tell people what to think, but we can tell them what to think about. And so if I just repeat CPI, there's no inflation, there's no CPI, CPI is inflation, there's no inflation, CPI, there's no inflation, we're waiting for CPI. If I keep repeating that, you'll agree with me. But meanwhile, the Fed prints $1 trillion, the stock market spikes, and people don't say, oh my God, assets have inflated. There's hyperinflation in assets. What they say is, oh, we're brilliant. The stock market's going up. Isn't that great? Well, it's not great for people with cash. By the way, here's the problem. it's not great for any company that's valued based on fiat cash flows, i.e. every value stock. If you have a stock valued based on future cash flows, and if the discount rate is equal to the M2 money supply, and if it goes to 15% a year, you have to discount the cash flows 15% a year. And so what you realize is if you're printing money, all of those value stocks can't possibly they can't hold value. And so you're destroying the wealth in the equity market over the long term while you're goosing it in the near term. And ultimately, you're going to create this massive stampede to a store of value that is not real estate, that is not bonds, that is not cash, that is not value stocks, that is going to be what? GameStop, super high tech, high flyer, speculative stocks, the SPACs, you know, and then that drives people out of the system. And so you have to then look at either gold or Bitcoin. And, you know, the answer is Bitcoin, not gold. And if you bought gold, you got destroyed. But if you bought Bitcoin, you did well. And all of that's being driven by monetary policy.